talk today is about the institutional case for digital currency. I'm going to look a little bit from institutional point of view about how these things are built. About myself, I work as a chief blockchain scientist at eToro and have a team of scientists building products for eToro called eToro X Labs. And I work in the university as the head of the financial transparency group at the University of Copenhagen. My background is within math finance and working within trading for a while. And I joined after eToro acquired the firm. So going all the way back to Bitcoin, one of the early applications has been around tokenization of assets, and projects at the Scarlet Coin in the early days, looking into fantastic ways to try and tokenize different asset classes. We've seen also the growth around BitShares, looking around the variety of asset classes that are tokenized, but had some dependencies on the BitShares ecosystem. Until what we've seen today, which is quite extensive, a bunch of stable coins. Most of them are USD based, even though some of them are trying to cover more and more currencies. And the later growth toward the adoptions and the potential that we see now, both by the Central Bank of China, looking into central bank digital currencies. We've seen before a long talk about central bank digital currencies, as well as institutions adopting their own currencies like JP Morgan coins. And Sweden as well is experiencing with it. And France have an open goal for building such a currency. So it seems like in order to achieve the next stage, which is very promising, we need to move towards more adaptable systems that are more in line with the way institutionals are working and thinking of it. So what I'm going to cover here, we're going to look both from the point of view of developed economies and emerging economies. And much of the promise in developed economies is around much better monitoring system for risk, looking at systematic risk in live using a system that have live reconciliation, ability to mitigate a lot of the post-trade challenges and actually save on post-trade processing, having improved AML and connections, and generally a reduction of costs around the trade cycle. Looking more into emerging economies, we see a possibility to lower the cost of remittance, which are still quite high. And we see a lot of effects that can help support the governments that are a bit more challenged and making more inclusive and enhancing liquidity in many of these markets. In most of these areas, we can see a lot of support for building stable coins and others, but we need to work a little bit forwards toward the regulation and working closer to it. The opportunity for impact in developed economy, also including the vast increase in market turnovers around currencies, including a bunch of currency swaps and derivatives, but we've seen a very large increase of about 3 times the size over the last 15 years. This market is ranging to be over $12 trillion, and all of the trade and changes could work really nicely within stablecoin and can be more cost effective. Going to developed economy still, we have large markets for derivatives, and we start seeing much more infrastructure that is affiliated for it. But this market is now $640 trillion and has a bunch of derivatives. Large part of them are interest rate contracts. But here we can still see a lot of settlements and work around stable coins to be able to be more efficient. So in short, we have large costs around settlements of derivatives, where gross transfer is in the range of $12,000 billion. And the estimated yearly cost is about 12 to 15 to 32 billion. Also in terms of KYC and AML, we have, based on research of Thomas Reuters, we've seen that the average cost for 1,000 biggest banks is $60 million a year around KYC, which means it's a yearly market of 60 billion, not including costs about the delays in inefficiencies around the KYC as well as fines that many of these banks receive. One second. Issues. Okay. All right. In terms of emerging economies, we've seen a lot of debt market there, which is based on US dollars already in these days. And a lot of this could be cleared and settled using stablecoins. And this amount in percentage of the market outside of the US is roughly 20% of it is in emerging market economies of debt. Again, about 4 trillion in size and been growing rapidly. We also see opportunities for building more stable coins in varieties of currencies to allow you to have depth in your native currency. Another very interesting element in here is we've seen a long growth from the 80s of the personal remittance amounts in US dollar billions, as well as a large growth in the percentage of GDP in the Sub-Saharan Africa that is actually covered by that. But one of the largest challenges for entrepreneurs is that there are quite large costs for setting up remittance-based businesses of $20 to $30 million. But part of the element of that is, of course, that with building decentralized technologies, we can really reduce a lot of the cost around of this infrastructure. And using existing decentralized infrastructure, you can actually connect to a bunch of those. And this can actually reduce the cost of setting up remittance-based businesses and innovation. So if we look at the opportunity for impact in emerging economies, we can see that well, cross-border remittance has $600 billion euros a year. The average cost for a small transfer is 7% of the amount. So it's roughly to 42 billion. As well as we've seen a lot of growth in economic value in Sub-Saharan Africa through investment in ICT. And we've seen growth of 150 billions, but we think these numbers can be much larger with making it easier for business to operate it and requirement of less cash. So what are the tools that we can actually use in order to provide some of the services? So one of the nice things from an organization and institutional point of view is that real-time reconciliation is available almost by construction when you're using digital currencies. You can see the value of all of your assets, and you can see a transfer in low cost, and you can even provide retention services and custody on top of it. More interestingly, even that the programmable smart contracts can offer ability of building like Lego blocks of a variety of services that can really be an enhanced multipliers on building technologies. We'll get a bit more into it in a little bit. From a more personal point of view, instant global settlement give you a low transaction cost, as well as can help you with transparency of seeing all the funds related to what you do, and give you ownership and direct ownership of all of your assets, as well as integration to custody service. The risk ahead that we'd like to see much more work built into is trying to really understand if building stuff around decentralized finance technology can have implication in terms of financial stability. We have seen some new products. Some of them were discussed today, like if we talk about loans and flash loans, they can create new transactions that weren't possible today. You can build transactions which are fairly complex that can run in a very quick and dependent manner. Would that have any implication of financial stability? Will that have issues of compliance with local regulations? Working with one market which is global may not make you completely comply with all of local regulation. Also, in terms of monetary policy, we need to see how the things are affecting that. There are also a new set of challenges that we can start thinking about and working on, and we can contribute a lot. Transparency is very basic to work with blockchain technology, as you can see the variety stuff on the transaction. However, it is very complex to do it in the way that is required by different regulation regimes. And you need to make it in a way that is a harmony and compliance with a variety of regimes. Also, we need to see how that's related to systematic risk and exposure for different parts coming from financial technologies. So back into the compositional Lego blocks, these have a lot of effect, and we would like to see more of these areas build around areas which are really related to regulation and growth of the technology. What I mean here is while we reach a $1 billion market cap around DeFi, it's still market that is highly built towards people which are highly advanced and are highly acceptant of problems. So even if we've seen some of the hacks that happened recently, we're still seeing a lot of understanding to those, because this is very common for a more complex kind of part of the ecosystem. However, if you want to work directly with regulators, you want to work with scalable technology that leads to end products and end customers, you need to build a technology that is much more robust and has to deal with AML, KYC, and identity. These areas could be connected to a vast majority of whatever DeFi application we offer today. You could offer any decentralized exchange and identity layer on top of it and possibly affect liquidity pools. And I would love to see more people working on these kind of problems. The same in terms of credit issuance and credit scoring. These are very basic issues in the normal system. And credit is also used by the companies that actually are funding a lot of the DeFi companies. But we'd really like to see how can we build more around it? How can we actually connect this element directly to DeFi technology? Can we offer different lending rates for people based on the credit scoring? This could be a very interesting element and could be allowing us come closer to what is expected today by traditional companies. So we're really meeting a part in the road where we can go to see a lot of work that is done on the permissioned and permissionless blockchains. Where the permission blockchain currently is where you see a lot of development, a lot of corporate development around large projects. And we also seen some of that in some of the work that is built around central bank digital currencies. Mainly because of scalability, which prevents you to build a trusted and large-scale system, as well as encryption, because a lot of transactions require to stay private. And while we have advances around zero-knowledge proof and around multi-party computations, we're still not able to see it in the mainstream of transaction around the crypto space. The same goes in terms of KYC and AML integration. In a more permissioned infrastructure, it is natural to have that directly because you have a prevention of who is joining the system. However, in a permissionless blockchain, adding a KYC AML layers and identity layers is not trivial as well, especially to make it in a way that will make it to the level that regulators can live with that. This is a big challenge. But I think that these areas could be done with decomposable smart contracts and can easily allow us move more to the permissionless space and having the potential, the same of the internet on a public domain where we can see a lot of money application moving there. One challenge that is not trivial to solve there and is maybe a little bit controversial is anything to do with the revertibility of smart contracts. These challenges is something we face already from the really, really early phase and times of the decentralized internet, when we've seen the fork in Ethereum happening around the DAO and others. Because for a system to be fully scalable, you need to have some mitigation of mistakes. And these are still not built today. But this would be a very interesting area to look into developing, both in research, but also in terms of applications. So to conclude what we're discussing here today, we've seen that we walk a long way. We have actually built a long and great invention within decentralized finances. We really benefit from the composability of smart contracts that allow you to actually integrate a bunch of systems. And I think it will be very interesting to see if we can add more systems that are really based on regulations. In terms of transparency, the technology is very basic and great for it. And the infrastructure can help us build it and mitigate a lot of legacy issues around it. And reconciliation can allow us live monitoring risk, can allow us live seeing risk and seeing problem as they occurred, and can prevent fraud in live, and improving transaction with risk and replying to them in live. Still, we need to start talking more about how we work with compliance. How do we actually move ourselves towards the direction that is led by the institutions and where the vast amount of assets are there? And also to see how we can add real life value and real value added to applications today. We also want to see how we can affect systematic risk and how we can use the technology to really reduce a lot of them in the next financial crisis. Yeah, if you're interested in more and getting in touch related to that, please welcome to contact me and our teams. In eToro, we are very committed to create social trading access to the global financial market and make the access really transparent. And in eToroX, we are building more professional-based markets for the pro players. And we have a bunch of tokenized assets, 17, offering 15 different stablecoins and a few others. And as well as in the financial transparency group, where we accept PhDs and postdocs, and we build a lot of research on this area. So yeah, thank you very much.